Hi everyone, scalping or swing strategy is a trading technique that we get in and out of the market within a short period of time. The time frame may be only a few minutes, so that if we are scalp traders, we need to make quick decisions. It's said that scalping is a high-risk strategy and we have to place multiple orders. So let's find out whether it's risky or not, what are its pros and cons, and who should be a scalp trader. Let's get started. Y'all know that based on time frame, we have three kinds of traders: scalp trader, day trader, and swing trader. Scalp traders hold trades in a matter of minutes. They can trade in the 1 minute and 5 minute charts. Day traders keep trades in hours, and they will focus on 5 minute, 50 minute, or 1 hour chart time frames. The time that swing traders hold trades will last for days. They usually trade in 4 hour, 1 day time frames, or maybe the 1 hour chart to place orders. When speaking of scalping, people may misunderstand that it requires high trading volume, and we will take profit if the price rises, which means scalpers will make small profits. However, if there's a loss, we will keep waiting for a rise in the future. Well, this is actually not true. Personally, I believe whether you prefer scalping or swing trading, short or long time frame, the capital management skill is still the same, and it's the most important one. Now I will review a scalping case that applying the bull-bear law. This is the GBP USD pair in the 1 minute time frame, and this is the order that I have placed. First, let's look at the 5 minute time frame and identify the trend. In the 5 minute time frame, we can see that there is an apparent downtrend. Before that, there is a powerful downtrend wave, and then this area is the sideways stage in 5 minutes. Next, this area breaks through this zone, and immediately when the bull pushes the price up to the strong resistance zone of the bear pushes the price back down right away. And in this area, because of the strong wave of the bull keeps pushing the price up, and when the bull pushes the price up to this zone, the bear will push the price back down. The price will have a conflict stage here. Now we will focus on the 1 minute time frame to take a closer look. And this is where the price is conflicting between the bull and the bear. Because the main trend is downward, so we will prefer the bear. The stage is in conflict because firstly the sell force pushes the price down from this zone, and secondly the buy force pushes the price up from this area. And when we look at this point, this candlestick breaks through this zone. We should enter a sell order immediately here, and we will set a stop loss in this area. In terms of a take profit order, we don't have a fixed position for it initially, and we will move it down here. However, to prevent the worst case scenario, which means the price hits this zone and goes up, we'll observe this area carefully. If the buy force pushes up, we will find a chance to exit. Because at this point, the bull tries to rush in. That's when we should exit. Now let's continue to observe the price progression. Let's take a closer look at this area. The price goes to this level but it doesn't react. Soon after that, the price has broken through, so that we can guarantee that we can hold our trade, and we will continue to observe the price progression to place orders. This process only lasts for a few minutes. We can see that there are only 5 or 6 candlesticks here, which means it's been 5 to 6 minutes. And with the short-term scalping, we have to observe carefully, especially if we trade in the 1 minute time frame. You can see that when it appears the green candlestick at this point, I will place the order because we can read this candlestick carefully here. The price is falling and this candlestick cannot go down anymore. So it will make 2 wicks and the tail is really long. This proves that the force of the bear is diminishing and the buy force will rush in. After this red candlestick is a green one with a long body, so we can see that the buy force try to rush in at this point. Next, we will have another confirmation, which is this tick. The price drops to this area, but then the buy force keeps pushing it up and makes a candlestick with a long tail like this. So at this time, we should exit, because this wave may be over now, and the price may push up to these areas, the nearest level. You can watch the video that I placed the entry point at that time. Now we will pay attention to this area. If the price reacts here, we have to place an order. And if the price crosses over, we can still keep our trade. I will record a short video and post it up for you guys. Okay, see you. Alright, if we continue to observe the progression of the price to keep trading, how will we handle it? In this case, you can see that the price has been going down and it shows signs of going up again, so that we can draw potential sell zones where the price can reverse when it reaches these areas. There could be these zones or these zones, or further are these zones. We will draw the nearest level and we're gonna wait for signals there. Now we will continue to observe the market progression. When the price reaches this zone, we will see that at this point, we cannot guarantee that it's safe enough, so we will keep looking at the price action. After that, the price keeps rising and immediately there is a red candlestick, so that the bull has tried to push the price up multiple times, but it cannot make it. Therefore, at this point, we can start to sell and set the stop loss order in this area. Now we have identified the entry point and the stop loss point, so where should we place our take profit order? We can expect that it will break through these zones. However, before the breakthrough, it has to cross over these areas. We have to draw these areas because they are the dangle ones where the price can react, and when it reacts at this point, we should exit right away. In this area, we can exit here because when the price goes down to this area, the bull will push it up and then the bear will move it down. After that, the bull pushes up and the price breaks through the bear zone, so that we can exit here. Or we can even move stop out to the entry point if we want to make sure that we won't make a loss. So now we will exit at this point. How should we place the next order? We will still try to sell in the nearest sell zone, right? Because we can see that there is a downtrend. So our nearest sell zone will move to this area. And then we will wait for the signals here and continue to sell. Here we can see that its structure has changed. When the price reaches this area, it collapses with this red stick. At that time, we should not enter quickly because the bull might fail only once, and this zone may keep rising and cross over this area. But after this candlestick, we can see that this stick breaks through this area. This is when the bull had gone up before. And when the price hits this point, it goes down and goes up here. After that, it continues to fail. And we can see that there is an engulfing candle pair here. So this pair can be a signal for us to place an order. We can see the first failure here, the second one here, the third here, and the fourth is this point. This is when the bull encounters failure when they reach the bear area. So now I will place an order here, stop loss in this area, and I will put take profit order a little bit distant. I will also focus on this level to know whether there is a dangerous signal so that I can exit right away. However, if it crosses over, we will continue to keep our order. Now let's observe the progression of the price. We can see that in this area the price is rising and then falling, rising again and falling. So we can move our stop loss order to this area or this area. I will move the stop loss order to this point. So this point is where our order is positive, so that it's safe for our trade. And let's take a closer look in this area. This level has been broken through. Now let's observe this level. We can place the order here because the ratio is quite good. If we went up here, the ratio would be nearly 3R. Nevertheless, if we expect a breakthrough, we will wait for a top here and we will move the stop loss down there. So that with this candlestick we can move the stop loss point down here. And now our trade is safe. Our take proof point will at least move here. That will be about 2R. Now we will keep observing. with this strong rising signal like this after a dramatic downward stage, so we can close orders right away without waiting for any other movements. Now let's see what will happen with the price progression. It will keep waiting. So we can identify the sideways patterns in this zone. The price cannot break through this area multiple times. If we don't place an order here, we can look at this area or this area to trade, because the price had failed to break through this zone so many times. And if we can place orders in this area, our take profit point will be a lot better. This scalping strategy has an advantage that there will be more frequent trades. We don't have to wait too long. There will be a lot of good opportunities to trade within a day. And because of the frequent trades, we should only focus on only one current pair. Trading too many pairs is not advisable. However, its disadvantage is that because of the short period of time, traders have to practice a lot and have quick reflexes. Otherwise, we cannot handle our emotions. Scalp traders must also understand and familiar with reading candlestick chart and make a quick reflex so we can trade efficiently. Therefore, only someone who really interested in it should practice this method, as I don't encourage you to use this trading style because it's really difficult to control our emotions. So we have to understand the scalping strategy and discuss its pros and cons. If you have any questions, feel free to comment below. Goodbye and hope to see you in the next videos.